welcome to our next panel, ladies and gentlemen. Now, the rise of Fintech has emerged as a very powerful catalyst for change and is very much empowering millions of people around the world when it comes to financial independence and also financial inclusion. And that is why we are here. We are now going to discuss emerging markets and bridging the gap over in emerging markets, especially when it comes to financial inclusion. We've done the introductions. We're going to get to know you a little bit more throughout this session. So let's get started. Your Excellency, Dr. Susan, I'd like to start off with you, if I may. Now, in the last 12 years or so, Kenya really has made remarkable change, remarkable progress. And I was reading that 80% of Kenyan adults now have a bank account as of 2023. And that is, in fact, up from 25% in 2007. So really remarkable change there. So how has technology such as mobile banking and digital wallets really had a significant impact? Tell us what's been going on.
Thank you so much. First, I would like to appreciate the organizers of this event and, of course, everyone who is participating. Looking at the panelists and all those who are participating, we have rich policymakers who are going to enrich the sessions. To the story of Kenya, it is a story of how the role of the regulator is important in ensuring that first you enable innovation. So it's a story where through innovation, through the regulator just allowing a simple, what started as a simple mobile payment solution has actually created a lot of impact. We've seen a lot of people's lives being transformed. We've seen the number of Kenyans who are financially included increase from 26.7% in 2006. And as per the FinAccess survey done in 2021, we had 83.7% of Kenyans being financially included. We've also seen the gap between, the gender divide gap coming down from a high of 12.7% in 2006 to currently 4.2%. And the rural-urban divide gap from a high of 26% to now around 12.7%. So you can see the impact and how actually it has changed, and it has been able to be a catalyst, especially to the economic growth, because we've also seen a number of Kenyans getting, employment through the issues of just mobile banking, and again, more and more of them are financially included. So it's a successful journey, and it's a journey that is quite remarkable, and it's a journey that has made Kenya to be the bedrock of innovations.
Some very, very impressive progress, as you mentioned, and a lot to learn from that model as well. So thank you so much. Let's move on now to Shashvat. Wonderful to have you here. Now, BharatPe entered into the much coveted Unicorn Club. Congratulations on that, of course.
Thank you.
That was a while ago, of course. Tell us a little bit more about BharatPe and your role in advancing financial inclusion over in India. And tell us a little bit more about the UPI, because that really has cemented India on the global map. And a lot of people and a lot of countries are following this model now. So tell us a little bit more about that.
Thank you, and good morning, everyone. So UPI is developed by a not-for-profit organization called National Payment Corporation in India. It's a method of instant payment transfer from bank to bank, so you don't need wallets and payment gateways and stuff. It's a direct switch, processing payment from one bank account to another bank account in 1 second. So, and just to give idea to the room about the success of UPI, it started in somewhere around 2015, so not a long while ago. And today it processes around 500 million transactions in a day. So let's call that a huge success, right? So, and lot of people have come together to make it a success. Like government has pushed a lot of agenda, regulator has been keen, this organization, which is not for profit, has made this technology accessible to everyone, and fintechs on top has built applications to give access to these kind of technologies for the last citizen of the country. So it's a combined effort. A lot of people have come together, and beautifully it has grown to such a big thing, and it's still growing 50% year on year, at this scale. If I talk more about BharatPe, we started as a company which caters to the merchant part of the transaction in this whole ecosystem of UPI. We started with interoperable QR code. So it's a one QR code for all applications. So if you go to India today, you'll see these QR codes and people scanning and making payments at all the shops. So BharatPe kind of started that in the country. We focus only on the merchant part of the transaction. UPI, by the way, is free for everyone in India. So government has made it free of cost, zero MDR. We're talking about financial inclusion. So I believe, government's intention and efforts make the most part of the financial inclusion. So making it free of cost really took it to another level of heights. And I think those kind of initiatives are very much important from government to do. So based on these UPI transactions, we underwrite the merchants and give loans to these merchants who were not part of the formal economy earlier, are now getting getting access to the credit in a formal way. So that is a mission that we are on, and we are very confident that we'll include each and every merchant of India into digital payments as well as digital lending.
So much to learn from that model as well. And of course, as you mentioned, government's role, which we're going to be taking a little bit look at a little later on. Chardith, over to you. Now, we are in the second decade of the cloud. So how have you seen technology over the past 10 years progress and sort of drive access to capital and financial inclusion? And tell us a little bit more about AWS and its role in this sector as well.
Good morning, and thanks for the question. So when we think about the last 10 years and how cloud and technology has really evolved, it's really democratized the access of technology to any organization that wants to build a more engaging, more accessible, better financial product, like the people on stage here as well. Now, what's really interesting about that is now lenders and banks and fintechs can focus on the things that really matter, which is providing capital to those organizations or those individuals that require it or are going to use it to drive GDP growth. Now, we see many examples of that in the last 10 years that we've been supporting the financial service industry as AWS. Everyone from Nubank, which started off as a very small bank in Brazil, now over 90 million customers that it serves. And their technology officers and organization talk about how by using technology, they were able to actually have a lower cost basis and using cloud capabilities and using machine learning so that they could actually bank the underbanked and the underserved of Brazil and in Latin America. We see the same with companies like Ayala Credit through Sub-Saharan Africa being able to do that. So what I think is really interesting when we think about the technology, not to think of cloud as servers or boxes, but really how does it actually reduce the cost of operations so that you can focus on those things that matter, experiment, but also then use that so you're focusing on the thing that matters from a financial service point of view, which is the end consumer, whether that be a merchant, whether that be an individual, and providing access at a lower cost basis and driving that efficiency ratio up. So that's kind of roundabout way of saying, that's kind of what we see in sort of that part of the industry.
Brilliant. And we're going to touch on a few of those points a little later on. But in the meantime, let's head on over to Rohit. Now, Biz2Credit helps entrepreneurs and SMEs access much-needed loans. And this has a very sort of fast approval process as well. So tell us a little bit more about your company and maybe the credit and lending market as well when it comes to fintech. What are you seeing?
Yeah, so I think we have a very fascinating story in a way because as a company, we are headquartered in US and with a very strong focus in the US markets as well as in some of the big emerging markets, including India and now in GCC markets also. So what we have seen over the years in US, normally actually we see that the rest of the world follows US, and that's for sure, is that a lot of the SME lending in the US markets has gone away from banks to non-banks and now in private credit. Like this year we will do close to $2.5–3 billion of lending. And now we also have created a whole rating class in this space, in this asset class. And recently we just did a securitization for $250 million with single A, double A rated, kind of securities, which from a non-bank perspective, was the highest rating that you can ever get. Now, why I'm saying this is because one of the big things we have seen in emerging markets is that still there's a lot of dependency on banks for lending piece. And our view is that as the march of private credit, march of insurance money comes in, that's about to change. You know, the challenge still is regulatory piece where we interact with a lot of regulators across the world now, especially in emerging markets, and they're very keen to learn. Having said that, they're also nervous about how this change will really impact the overall financial markets. So having said that, a lot of things that we are starting to see from data democratization, especially digitization, countries like India and even in GCC, they're pretty, I would say, at par or even better than US markets right now. I think what these markets lack is obviously depth of the capital markets and also the local participation, still. While that can be addressed pretty quickly with the right data sets and the right technologies, I think the challenge for most of the institutions still would be that how they can accept a non-bank asset class to become a mainstream asset class. And that's where we have been working for last, I would say, 6-7 years. And recently what we have done in GCC is actually very interesting. So we have now partnered with sovereign funds like ADQs, and also have now done deals with large payment processors like Magnati and few others to build and bring a fully embedded finance environment into the region, where merchant financing, POS financing, invoice factoring products can be handled in a very seamless manner, and also all the data reporting back to the investor groups can be done in a very seamless and a transparent manner.
Thank you so much. Very interesting model there, so thank you for that update. Right, I wanted to go back to Shashvat just for a moment. Tell us a little bit more about how fintechs have been at the forefront of driving financial inclusion within emerging markets, and how exactly, what type of new age disruptive technology are we seeing when it comes to the adoption of financial services as well?
Good question, Laura. So, as I said, so a lot of people contribute to making a technology or making people financially inclusive in a country. But I believe the role that fintechs can play is really the role of access and quality of experience. So I believe fintechs know the customer best, and they are well equipped to give the best kind of customer experience there is. And while I'm talking about customer experience, I'm not talking about rocket science technologies or IPs. I'm talking about how simple and convenient a product can be. So I'll give an example. UPI is by default live in hundreds of bank applications for their own users. The users come there to transact. They've added UPI to their stack. But right now, all the UPI market share is with fintechs and not with banks, because the customer experience is really makes a differentiating. Back in technology is the same, but how you face a customer and how you give that journey of a payment is really makes a difference. And I'll give an example. I'll take names. PhonePe and Google Pay are two applications in UPI which cover 85% of the market. So if you open that app and you open any other app, you'll see a clear difference. These apps focus on payment experience. You open the app, it's a payment app. There is a scan and pay. There is a send money to your friend. There is a send money to your relative, and it's all about payments. And it's simple, few options on the home screen, and there you go, like your payment is through. We access your transaction history, you access your bank balance, and these are the kind of simplicity and the kind of convenience that fintech apps provide to customers. I think it's very difficult to achieve in a complex and highly bureaucratic environment of MNCs or banks. So I believe that is very important for financial inclusion, so that the technology is understandable for a layman to the last mile, rural areas of the citizens as well.
Of course, simplicity is always key, isn't it? And ease of use, and to bridge financial literacy at the end of the day as well. Very quickly, we are running out of time, and I wanted to get a few more questions in. So over to you, Chardith, very quickly. Now, you recently shared your experience in helping your customers when it comes to when it's your banking customers, excuse me, when it comes to generative AI adoption. It is, of course, the year of AI. So what role is generative AI going to play when it comes to financial inclusion, especially, as we mentioned, with language barriers? There's 780 languages spoken over in India, apparently, I was reading. So how does that play a nice part?
Yeah, no, and I think it's really interesting, and we can't have any conference without talking about generative AI, so it's really good I get to answer that question. But, I think with generative AI, I think what we're seeing is really the human-to-computer interface continue to change, okay? So today, you talk to your Alexa. If you use Alexa, you talk to your iPhone or Siri. Now, we're seeing the same thing actually apply all the way through corporate life and how generative AI can actually change how humans interact with computers. Now, we're seeing this in the corporate space, so you could think about just a call center operator being able to talk to someone of a different language, being able to get real-time translation, being able to look at knowledge repositories and be able to feed information back to them. We see customers doing this across all parts of the financial services lifecycle, from generating content so that they could support financial literacy, to doing translations in real time for call center operators, all the way through to what Verifin and Nasdaq company actually shared about, how they're able to reduce the amount of effort that it takes to do suspicious activity reporting required with OFAC reporting. So when we look at generative AI, I think it's a compounding effect that it's having in the banking industry and the fintech industry. One, it's making it more efficient to do those manual labor activities that were not value add to the customer and actually just created friction because of the way banks and fintechs and others operate. And two, it's actually changing the way that humans interact with computers, whether that's direct translation or just using natural speech patterns to do that. So, we're still early, but it's really interesting to see where this technology is going to go and how it's actually going to retransform or change the way that some of the banking services are truly delivered to end consumers, be it banks, individuals, or small businesses.
Very interesting indeed. It's going to be really exciting and interesting to see how it all plays out and how we can reach those hard, underserved areas, of course. Your Excellency, over to you. The landscape in Kenya, as we mentioned, has changed drastically, of course. So tell us a little bit more about the government's role in this and some of the key initiatives that have been used to help the sector and to help promote financial inclusion over in Kenya. And because we don't have much time, maybe you could also tell us a little bit more about some of the key gaps and challenges that you're seeing right now and what you're doing to solve those.
Thank you. Considering that in order for us to attain sustainable development goals, financial inclusion is key. Some of the initiatives that the government of Kenya has undertaken to just make sure that the process is seamless is, one, to ensure that there is, of course, power connectivity, internet connectivity to most parts of Kenya, especially the rural parts of Kenya that had been left behind. Secondly, is to come up with initiatives like the Hustler Fund, which is a fund that is targeted to capture those on the lower end of the pyramid. And the initiative of this fund was to make sure that, one, most Kenyans who had their credit affected had their credit repaired. Secondly, to ensure that they access affordable credit. And then, of course, thirdly, is also to be able to encourage the culture of savings, because there is mandatory requirement where if you borrow a specific amount, 5% of what you have borrowed is supposed to go into your savings, and 30% of that will be accessible within a year. Then 70% is supposed to be built on and accessible after retirement. We've also been able to come up with a DAO CSD, which is a platform that has encouraged investors. Actually, now investors are able to access government security 24/7, anytime, anywhere. And with this platform, we've seen that the number of those investors who has actually increased from July last year by 63%. We further have gone to democratize the process by ensuring that we lower the amount that anyone is allowed to invest in government security. Thirdly, one of the other initiatives, which is as a form of us just ensuring that there is consumer protection, was, as you proceed on with issues of innovation, most of the time the consumers actually are exposed. And so we came up with the digital credit providers regulations to ensure that all our consumers are protected. Some of the challenges that we have continued to face, of course, in this journey include, as in many other emerging markets, and developing economies, we still have the issue where most of the teams, even from the regulator side, do not have the capability or the capacity. And sometimes regulators will actually be trying to catch up with the industry, because sometimes innovation will precede even the regulator's capacity. Secondly, the other challenge has been issues around financial literacy, because we noted from the surveys that we've done and many studies that many people, especially in the rural parts of Kenya, do not even understand simple financial issues that they are supposed to know, even just like even how to calculate interests. So at the end of it all, they get exposed when they are borrowing, and so that's one of the things that we feel and we are actually working on to make sure that more Kenyans are more financial literate.
Very impressive indeed. Final question for Rohit, because we just have a couple of minutes left, sadly. It's gone so quickly. What are the main barriers in your mind when it comes to entrepreneurs and SMEs to access capital? And also, how do you actually balance the potential of high returns with, of course, the risks associated with lending? How do you balance that out?
No, I think that's a very good question. So, as regards the risks, what we have seen is that, every market is a little different, but underlying risks are pretty much same. So, in a market like US, we have seen that, there's a lot of cyclicality in different industries, so that impacts. In markets like UAE especially, we have seen that, flight risk was very significant in this market. In the past, we have seen a lot of lenders, lending very aggressively to SMEs and then getting, their portfolios pretty damaged. In markets like KSA, we have seen that while there's not a flight risk, I think the big challenge for most of the markets, including US, in the SME lending has been lack of data. You cannot have your credit bureau data, which is mostly fixated towards consumer lending, is not easily transferable over on the SME side. What we have done over the years is that we have done a lot of work on the cash flow analytics. That is, and we are a big customer of AWS and now using a lot of the Gen AI piece also in that, because that's going to be very transformative in my view. And I think the other big challenge is pools of capital, the availability of that. While I think US is blessed with US dollar and very deep capital markets, I think in the emerging markets, the big challenge is there's very, very weak differentiated pools of capital which are available even today. And also lack of awareness and lack of data transparency. So I think those are the risk factors and also impediments of what is holding back a lot of the funding. If policymakers, if you go and ask them, nobody will say no for SME lending. Everybody wants that to happen. I think those are the big challenges, and I think with advent of technology, digitization, and now AI, I'm very bullish that we will be able to tackle a lot of these issues and also build very scalable portfolios in different markets with the right risk indexation, because I think that's very important. That was the risk indexation compared to the returns, and also how you risk rate different kind of SMEs and entrepreneurs so that they also get money at the right price and right tenure.
Sadly, we've run out of time. That's gone so quickly. I've got so many more questions for you as well. But in the meantime, so much is being done. Still a lot to do, of course, as well. Any further questions to any of our panelists, please do make sure you grab them off the stage. In the meantime, let's hear it for our panel. Fantastic discussion there. Thank you so much.